If you go back to 2000, actually we can go back to 1972 to 1980. So we've had these two cycles where the gold miners did well. So from 72 to 80, and the reason why they did well is because the economy did not do well. So gold outperformed the stock market immensely. We went from $35 gold to 850 gold. And the stock market sure didn't go up 20x, did it? So then if you go from 2000 to 2011, gold went from 250 to 1935, which was about 7x. Yeah, about 7x. So this time I'm expecting gold to go up about 3x. So we're currently at almost 3,000. So we're going to get to about 7,000.
Welcome to Capital Cosm. My name is Danny, and today we have Don Durrett back on the show. Don, thank you so much for making your third visit to Capital Cosm.
Yeah, Danny, welcome. Thanks for having me back. I'm looking forward to it.
Yeah, definitely. Likewise. And with all that said, Don, let's just take it away. Let's start off macro. Let's get your 30,000 foot view. What's top of mind for you right now by way of the markets, the economy, just things in general? What's the top? What is occupying your headspace right now?
The election. I do not think that Wall Street has the election figured out. First of all, I think Wall Street expects Trump to win, and he's not going to win. Not because that he would win in a fair election, but it's not going to be a fair election. I'm an election denier, but the reason why I'm an election denier is just looking at the facts. We knew that the mail-in ballots, it was very easy to cheat last time because all you had to do was take a mail-in ballot and copy the thing and then just stuff the ballot boxes. And I think that happened. And the reason why I say it's easy to do is because they weren't checking the ballots. If you do any research on it, on the day of that election, any mail-in ballot that came in, they basically just counted them. There was only 1% rejection rate, which is the norm. That was when before this election, we never had mail-in ballots in a large number. We had absentee ballots, and the absentee ballots, they only went out to a certain number of people. And it had their name on it, but basically there wasn't a lot of cheating going on. There was some, but not tons of cheating going on with absentee ballots. With this election, because of COVID in 2020, they had these drop-off boxes. And anybody could go to those drop-off boxes and drop off ballots. There's no checking. There's just a valid.
The election is actually ongoing right now. Election day is just the last day of the election.
Yeah. So my point is that it was easy to cheat. We all knew it was easy to cheat, and yet they did no audits. There was no audits on mail-in ballots, not anywhere. And there was a 1% rejection rate. And I think that's why Biden got 81 million votes when Obama got, I think 65 million, maybe 66. And Biden got 15 million more than Obama. It's like, I'm just questioning that. My gut feeling is that election was fraud, and that I think it's going to be very easy for them to stuff the box again. But my point is, I think the election will be close, and I think that fraud will push Harris over the top. So that's my gut feeling. We'll see what happens there. Now, if Harris wins, this is where I think everything goes off the rails. I think the reason the markets are doing well is because of an expectation of a Trump victory. So if Harris wins that unexpected, I think on November, I actually think it'll begin before the election. I think running up to the election, starting next week, I think the stock markets will start selling off. Maybe the S&P sells off 200 points between now and the election, just on nervousness of what could happen, hedging your bets kind of thing. And then on November 6th, the day after the election, I think all hell breaks loose and we start down. The markets start down, and the bull market ends. So we've been in a 15-year bull market. It ends, I think. Now, if you think the economy is strong, and it doesn't matter who wins because the economy is strong, so we're just going to keep going higher and higher and higher. I think right now, the S&P is overvalued by about 10%. I mean, if historically, I mean, if you look at the Buffett indicator, but that's the reason why Buffett's selling everything. I mean, this market is way overvalued. I think it's overvalued by at least 10%, but 10%, I mean, that's 5,700 points. I don't think that's enough. I think, I think it's worse than that. I think it's going to go down between now and the end of the year, 20% is my expectation. And so today they came out with a retail sales number, and they keep saying the consumer's strong. I submit that at least 50% of the households can't pay their bills right now, and that's not going to get fixed anytime soon. It's a problem. So the consumers are behind the eight ball here. So we had retail sales, they were down 7.5%. That's a big number, month on month, 7.5%. And they adjusted it because we have election, of course. They adjusted it so that it looked like it was strong sales just because of an adjustment. But the actual numbers were 7.5%. Month on month, month on month.
Mm-hmm.
Why is September something you need to adjust for? What happens in September? I mean, you have back to school selling, but that's in August. Nothing happens in September. 7.5%. So retail sales, you have that going on. Housing is not strong at all. I don't. Autos, we saw Stellantis, their sales are down 30%. We're seeing the banks came out with their earnings, and Jamie Dimon was so upset that he got angry in his call because somebody was talking about the yield flattening. If the yield flattens, they start losing money. What are you going to do about the yield flattening? And he got angry. And you can see that, you know, the banks aren't happy right now. If he was in a good mood, he wouldn't have got angry. They basically set him off by focusing on the yield curve flattening. The banks cannot afford a flat yield curve. They don't make any money. Somebody tried to point that out. He got a little irked. But the banks are not doing great. So in what economy, how can you have a strong economy? The banks are not doing good. You know, they're having their charge-offs are, look at the trends. Our delinquencies are increasing. They're not decreasing, they're increasing for like auto loans, mortgages. They're increasing. The delinquencies, the write-offs are increasing. The trends going the wrong direction. We're not strengthening. Wall Street is under this impression that as long as the stock market's up, oh, and here's another one for you. Earnings for Q4 are only supposed to be up 4%, which is pathetic. That 4% will all come from the Mag 7, all of it. In other words, the other 493 are going to have net negative earnings in Q4. And they think that we're going to take off. Then we get to Q1 of next year, and all of a sudden everything's rosy. And they're expecting this over 10% earnings in Q1 because they're lowering rates. Well, if they lower rates, the consumer is going to start buying houses and cars. Well, guess what? They're only going to lower rates 1%, 100 basis points. That doesn't fix the interest rate issue. You got to lower them like 2.5%, 3% before it really helps people. So why are earnings like right now they're weak? Why are they all of a sudden going to improve? We're seeing Boeing laying people off in large numbers. We're seeing banks close a lot of their, we're seeing lots and lots of negative stuff. And I think that we go to November, Harris wins, Wall Street basically has convulsions. The stock market starts going down, and that triggers the recession. I think my personal feeling is the stock market is fine until you get to about 5,200. I mean, it can go down to 5,500 in a heartbeat. Nobody even blink. But once it gets down, below 5,300, somewhere in there, you go below 5,200, and that's when people are going to start jumping off the boat. And that's when it's going to get dicey. And I think by mid-November, we'll be below 5,000. I'll end it there.
Yeah, you did mention the election probably going to Harris, even though it's being priced in by Wall Street. It's interesting if you look at the betting markets as well. Trump is ahead of Harris on pretty much every single betting market out there. Predicted, Poly market, etc.
I want to interrupt and just say something about that, and then you can carry on. I really feel that the reason why is because people do not believe there's going to be fraud. If I didn't think there was going to be fraud, I'd be betting on Trump too. And I think that's the reason why Trump has these leads in these betting markets. Because if you just look at the raw data, and if you look at how the appeal of Harris and the appeal of Trump, it looks like Trump's going to win on all data points. So I just want to fill that in. The only reason why I think
Yeah.
he's way ahead in those betting numbers is because they don't think fraud's going to happen.
Yeah, the interesting part of it all is that if you look at those same betting markets this time 4 years ago and this time 8 years ago, they all had Trump down. So this is the first time he's actually been ahead by a substantial margin in those markets. That will very well may be the case with the fraud and everything, but it's just he's never had a lead this high, either in the betting markets or in the polls as he does now. Not in 2016, not in 2020. So it's very interesting, and yeah, she very well still may pull it out. But did you see that exchange between Biden and Obama? In that Catholic, I think it was like in that church or something, and they brought in this lip reader to translate what they could have said, and Biden basically said, "I'm stronger than her," and Obama pretty much agreed with him. He said that's true. So there is a lot of frustration within the Democrats over her performance, don't you think?
Well, first of all, I think the reason why Trump was behind in those previous two polls is because there was a lot of angst against him, and the people he was running against looked like they were going to beat him, Hillary and then Clinton. Today, it's a complete opposite. I mean, Biden's administration has been, I think, a train wreck because of Biden's mental incapacity. And then Harris, she didn't really run. She was basically given the nomination. She didn't run. She was given the nomination, and everybody knows that she would not have gotten it if she ran. If he would have bowed out before this primary season, she would not have won. I don't think. I think everybody else kind of recognizes that too. So she's not a strong candidate. If the lip syncer was probably right. I mean, she's not a strong candidate. Everybody knows it. She might have less mental capacity than Biden did when he got into office, and he was, mentally handicapped. She's not that she's not smart. She just she she doesn't have really strong grasp of the issues, in my opinion. And so it's kind of I think it's somewhat superficial. So it's scary as hell as everybody to have somebody like that as in office. So people don't think that she has the chops to win. And so that's one of the reasons why they think Trump is going to win. They think she's a terrible candidate, but
she also lacks verbal prowess. She has a hard time explaining certain concepts and things
she
about
does.
herself.
Yeah, but then she does a good job on certain issues. I mean, so she's not stupid. She just, like I said, she just doesn't have the chops. But I think it's all irrelevant because we'll find out in 3 weeks. Because, like
Will
I
we
said,
though?
I expect those mail-in ballots to be stuffed and for her to
It
win.
might take a couple of weeks, from there to get a final result.
I doubt we'll get one on election day, election night. I doubt it. I really do. I think it'll be too close. I don't think they'll be able to count all the mail-in ballots that come in that day, which is going to be odd because the mail-in ballots should all come in prior. They should have all the mail-in ballots counted before, but they won't. Just like last time. I don't think there'll be any changes. But let's get back to gold and silver.
Yeah. How do you think the gold and silver market react to a Kamala win versus a Trump win?
A heart attack, because we have both parties are spenders. I mean, it's pretty evident. Trump is running on tax cuts, all kinds of new tax cuts, but he's not running on increased taxes. So we have a $2 trillion deficit today. It's not going anywhere. So they're both spenders. We know that. But the difference between the two of them is that Trump isn't somebody that's going to go after raise taxes, but she will. So she will try to keep spending what we're doing, but she'll also try to raise money through higher taxes, and which is bad for the economy. But simultaneous to that, a lot of the Democratic policies, such as the green energy, the carbon, the whole climate change hoax, in my opinion, thinking that man-made carbon, is the reason why we have global warming and that we need to address it. We need to address man-made carbon. I think we're going to find out that that's a bunch of baloney by the end of the decade, because we're going to get colder. And we get colder, then we're going to realize what we need: more carbon. We need carbon. It's cold. Carbon makes us warmer. We're going to be praying for carbon in 5 years. So she's not going to back off on addressing climate change, which is anti-business. So the whole green energy thing is going to remain in place.
Hey, Don, really quick, have you seen this chart here? So this was released by the Washington Post, and essentially it says science has been able to capture Earth's climate over the last 485 million years. And I'm surprised they actually released this. And this is where we're at now. I mean, this looks like a all-time low in global mean surface temperature. And it's like you said, yeah, things are cold as they've ever been.
Right. Well, the getting colder hasn't started yet. I think it has been warming for the last couple decades, but it's about to get colder, noticeably colder by the end of the decade. I think we have so what happening is you're getting the temperatures, we're getting extremes, extreme heat, extreme cold. Like this has been hottest summer ever in where I'm at in the Phoenix area, the hottest summer ever. It was pretty crazy. We had 100 degrees from June until the middle of October. It was insane. But that's one extreme. Now what's going to happen, like in 3 years, we're going to have the coldest winter that we've ever had. It's going to go from one to the other. But back to the Harris administration, she is not going to be pro-business. We know this. She will try to do a few things, but what she's going to try to do is it's not in kind of a capitalist type mentality. What she's going to do is try to give money. She actually said it with black businessmen, fully refundable loan. Here's 20 grand, go start a business. And then you won't have to pay us back. It's like, that's just ripe for fraud, right? It's like, oh, give me this 20 grand. I'll go, thank you very much. I don't have to pay it back. It's like, what? So
I mean, if I was eligible, I'd do it.
Oh, absolutely. I mean, it's basically a net negative. Well, we'll see how it goes. But I think what they should do is allow them to pay back the loan slowly, in 20-year loans. You don't have to pay back $1,000 a year kind of thing, with maybe, zero interest rates or something. I don't have any problem with doing stuff like that, but I don't think they'll be smart about it. And so I think the net, and the other thing about Democrats, as far as, pumping the economy, that we have been moving away from capitalism. The Democratic Party has been moving towards more of this equity type of economic system. Hire people that aren't qualified. I don't think that's going to end. The DEI system. I don't think DEI is going to go away. I think they're going to pump it some more, or they'll rename it. But that whole mentality is not the way not the way economics is supposed to work. Economics is supposed to work where you hire the best people that are capable of doing their jobs. And if they're not capable, you get rid of them and you find somebody who is capable. That's the reason why I've never been pro-union, because unions are antagonistic towards the objectives of the business. They tend to hurt the business more than help it, because they don't work in tandem with the government's with the business corporate policies. I've always thought that we should change the way we do our corporate with the blue collar workers, like the people on the lines, for instance, people that build the cars. they should be paid profit. They should be getting bonuses and profit sharing based on profits instead of, and that's how they should be paid. And it should all be, they should also be all be aligned with you, with management, and not, and that's when you're all in aligned, then you're going to work harder to get a bigger bonus. So our system of unions is, I think, negative, if you will, and Harris is going to be pro-union all the way. So you're not going to get, bottom line, I'm trying to give you reasons why I think the market's going to react in a negative way when she wins.
And what does that mean for the gold and silver market, though, specifically?
Okay, so it's a good question. So if you go back to 2000, actually, we can go back to 1972 to 1980. So we've had these two cycles where the gold miners did well. So from 72 to 80, and the reason why they did well is because the economy did not do well. So gold outperformed the stock market immensely, immensely. We went from $35 gold to 850 gold. And the stock market sure didn't go up 20x, did it? So then if you go from 2000 to 2011, gold went from 250 to 1935, which was about 7x. Yeah, about 7x. So this time I'm expecting gold to go up about 3x. So we're currently at almost 3,000. So we're going to get to about 7,000. But my target is only 4,000. But if gold goes up 3x, but I think gold started up in 2019. So if you go back then, you go up 3x. It's like right around 5,000, 5,500. So my target, I think it's 4,000. But if we go somewhere between 5 and 7,500, it wouldn't surprise me at all. Looking back, but going back to those last two cycles where the miners did well, those were 10-year cycles. 10-year cycles where the economy was struggling versus gold. Gold was outperforming the stock market. Well, guess what gold is not doing right now? It's not outperforming the stock market. They're trending together. But gold has overall, I think gold has outperformed if we go back to 2020. But this year they're tandem, they're right together. So the decoupling is what's going to happen is when the cycle is going to return, I believe. And I actually think that gold broke out in 2016. So if you look at the charts, 2016 to 2026, but you could say it's 2019 to 2029. But I think we're going at least to 2026 before this gold market, bull market ends. But it'll probably be a little longer than that. 27, 28, 29, somewhere in there before this market finally tops out. And I think it will top out 4,000 or higher. I'll put it that way. And so we're going to get a decoupling event. And I've been waiting for this. And I talk about write about it all the time, in my newsletter and my weekly recaps, is that what the miners need is the bull market to end in stocks. So we go back and have one of these cycles where gold outperforms the stock market. That's when miners do well, when gold's outperforming the stock market. And I think that begins. So what's going to happen here, I believe, is that the stock market's going to go down and gold is going to outperform the stock market. So I think the stock market is literally going to crash over the next 6 months. It's just going to be a steadily selling down. I think it's going to go all the way down to 3,000. So 3,000 to 3,300 is kind of my target area. And I think we won't get there until March, April, May. It's going to take a while. But
how do you arrive at those numbers?
Just historical. So Jeremy Grantham, he thought that we would crash to 2,500, and then he rethought it out, and he said, because the government is spending so much money, we likely won't go to 2,500. That's kind of what he said. And so he's more I had to throw numbers out there. I'm not 100% sure, but I remember he did say we're not going to 25. And so if you throw 25 out, if we're not going to 25, then maybe 27 is a possibility, but I just use 3,000, just a little conservative. But I'm in the Grantham camp that I don't think we're going to crash all the way down. David Hunter thinks we're going to go down, drop like 2/3, 70% drop. I don't. I think that the combination of technology, because I think technology is going to keep improving here this decade, technology and money printing, and then you have crypto, which is going to help. Although there's a lot of factors that'll buffet a crash, if you will, but it's not going to be able to stop because again, these markets are way overvalued. So it's not going to be able to stop. They're overvalued. This is important. They are overvalued at current economic growth. Current economic growth. So they're overvalued 10% based on current economic growth. So if you lower that economic growth, then you have to lower the targets. That's the reason why it's going to go to 3,000 to 3,300 because the economy is going to slow. And that's why. And we're going to get a slowing. So the bull market's going to end. We go into a recession and the stock market is going to sell, sell, sell. It's going to be enormous. Then, like I said, gold will outperform the stock market. And I don't think that gold will retest. Like we broke out at 2070 back in March. I don't think we're going back, and no chance we're going back that low. Some people think we will. My target for the low was 2,200, but I have to keep raising it because the gold's been so darn strong. So I raised it from 2,200 to 2,300, and now I'm at 2,350. So I don't think this gold market is going below 2,350. That's my current target. And silver, I'm at 2,750. So gold down about 10%, silver down about 15. But once they hit those levels, they won't stay there very long. They'll stay there for maybe 2 weeks to a month, and then they'll take off. And who knows? They might only stay there a week. But I would say 1 to 4 weeks. When we get this cycle low that goes into gold and silver, 1 to 4 weeks, and we're off and running. I'm very bullish for December. I think sometime in December, this 1 to 4 week, I think we'll get the floor in for gold in November. And then 1 to 4 weeks after that floor gets put in, I think gold and silver are off to the races.
Hey guys, quick pause. I won't take too much of your time, but if you're looking to add into your gold and silver stack, please consider Miles Franklin. More specifically, email them, info@milesfranklin.com, and tell them that Capital Cosmos sent you in the subject line to unlock special pricing that you won't find on the website. In the unlikely event that you don't like the prices, you could always not buy. There's no commitment necessary, but I do recommend Miles Franklin for a number of reasons. The customer support is top notch, the prices are great, and I know the people there. Great people all around. So with all that said, let's get back to the video. Thanks, guys. What about silver specifically? What do you see?
Yeah,
silver?
I think it goes down 15% and goes to about 2,750. Now, a lot of people think 30 is going to hold, but if the stock market crashes here in November, it's going to be really hard for silver to hold $30. I mean, silver can go down $2 in a single day. It's a very volatile metal. And so for them to think that silver is going to hold 30, I just think that's fantasy. I know a lot of these people, a lot of these TA guys are really bulled up thinking 30's holding on silver. And a lot of them think 2,400, 2,500 are going to hold on gold. I am in the camp that 2,400 has a chance of holding. I'm at 2,350. So 2,400 actually has a really good chance of holding here. And that would be fantastic. But 2,500, if the S&P goes down 300 points in a couple of weeks, chances are that's not happening. Now today, gold did fabulous. Gold was up big, spot closed above. Closed 2692 on spot. I think we're above 2,700 on futures. But silver lagged. Silver's still below $32. Silver's lagging. The miners 328. So I'm going to talk about there's lagging. But gold, yeah, gold's doing great, all-time highs, but it's just following the S&P. The S&P's hitting all-time highs. The S&P today, intraday, was all-time high. So they both have just been sticking in their all-time high levels. They've just been following each other higher. So I want to talk a little bit about silver, and I want to talk a little bit about the all-time high in gold and silver. What's going on, what the dynamic is behind that. I think people are interested in that.
Yeah, go for it.
So first we'll talk a little bit about silver here. So silver and the miners are lagging. So the miners at under 330 is just ridiculous. We're at almost $2,700 gold with huge margins. And the HUI is at under 330. The HUI cycle high, the cycle high in 2020 was 365 in 2020. Gold wasn't even close to these levels. We're
And
not
the
even
price
in,
of oil has been fairly suppressed.
yeah, which helps gold, right? Helps the
The input
miner.
costs, yeah.
Yeah. So you have the HUI not even knocking on the door of its cycle high of 2020. It's not even knocking on the door, where silver did. Silver's above its cycle high. Its cycle high is 32.50, which it hit in May. It actually, this month, it actually went to 32.95, but it didn't hold. I don't know if 32.50 was a close or not, but 32.95 is kind of a cycle high. But so it's hitting those, but the miners are not. So what is silver and the miners telling us? I firmly believe that the reason why they're both lagging is because investors are very cognizant of the fact that we've been in a bear market for miners since 2013. And the only thing that brings that bull market back in the miners is what I said earlier about gold outperforming the stock market. It's not outperforming. So people are going, and this will take us to the next topic that I wanted to discuss. So what's keeping gold up here? Why is gold at an all-time high? And
Central
I
bank buy.
submit I submit the reason why it's at an all-time high is because of systemic risk. And Wall Street hasn't figured this out yet. I think Jamie Dimon has, Ray Dalio has. The systemic risk is the debt problem. And everybody's ignoring it, thinking that we don't have a debt problem. We're fine. We can print as much money as we want. And gold's saying, no, you can't. And it's a combination of systemic risk in the US, where basically the dollar crashes because foreigners dump it, because they're like, US treasuries are supposed to be risk-free. 3-month treasuries are supposed to be risk-free, all the way out to 2 years. The average person believes that 2-year treasuries or less are risk-free. And that's the reason why gold's so high, because gold's saying it isn't either, people, wake up. And the reason why it isn't risk-free is because the treasury can only borrow as much money as the market allows them to borrow. They cannot monetize all of it. If they try to monetize all of it, it's just a doom loop. Because once you start monetizing all of it, everybody starts dumping your bonds. That's what happened in Japan, where Japan's central banks ended up owning all of the government JGBs, all of them. That's what's going to happen here as well. But here you can't do it because we're the reserve currency. You got all these trillions of dollars of foreign out there, and they're going to start dumping them. And when they dump theirs, it makes the dollar go down. Whereas in Japan, when they did it, it didn't make the yen go down. See the problem? We can't get away with it. We can't do it. And it's a doom loop. And so the doom loop has already started, and that's why gold is high. Gold knows the doom loop started. That's the message here. And the reason why the miners are lagging is because they're going, I don't want to catch a falling knife when something's going to blow up. I'm not going to go buy those miners when they're just going to go lower. I don't want to buy them. I want to buy them when they're trending up. I want to buy them when the bull market's here. So the bull market, I think, appears when silver gets above 35 and the HUI gets above 350. Once those two happen, I believe that we're in a bull market for miners. But I don't think we get there until this bull market in stocks ends. So I don't think we're going to get to $35 silver by November 6th. And if we don't get there, and I think there's like nil chance we get there. We don't get to $35 by November 6th. We're going to 27.50, 28, 26.50, somewhere in there, 26.50 to 28. We're going down. We're going lower. That's the rug pull everybody's waiting for. And then you watch how much money goes into gold and silver. When you get to $35 silver and 350 HUI, you watch how much money goes in. Silver will rip from 35 to 50. The HUI will go from 350 to 500, lickety split. Like within 2 months, it'll rip people's eye, rip your face off. And then it'll be too late to get in, but everybody will keep chasing the 100% returns, but your 200, 300, 400% returns for quality, producers, the ones that Wall Street wants to buy, will slip away pretty quickly. but we'll still inch up. But that's the beginning. This is the thing that's fascinating, is that is actually the beginning of the bull market in miners. The beginning. It doesn't even start until you get to 350 HUI. And then it's going to go all the way to 1500. 1200 to 1500 is my target for this bull market. We're just starting.
Can you say that one more time?
My target for the HUI is 1200 to 1500. We're currently at
Wow.
325. So for this bull market, which will end, I think, 26, 27.
What if, in the, as you put it, the unlikely scenario that Trump wins, how do things shake out differently there for gold and silver in the markets?
Not as good as the scenario I just laid out. If Trump wins, there's a good chance that we only have a hiccup in the markets, and we never even get to 5,000 on the S&P for a long time. If Trump wins, everybody could be really super bullish that basically Trump is going to keep inflation low and keep the economy growing. We're going to have a soft landing. So there's going to be a real strong feeling that with Trump victory, we're not going to have a recession. So there's going to be a lot of bullishness. So we could end the year in the David Hunter scenario. We get to 7,000 on the S&P by the end of the year. I think that the David Hunter scenario is based on Trump victory, but he says it doesn't matter. But I don't see how the market goes higher if Harris wins. But yeah, if Trump wins, everything's gonna get delayed, if you will. Silver could, it gets real interesting. Trump wins, the market goes to 7,000. Silver could go to 50, and the miners could break it. Everything could go up. That's kind of the Hunter scenario. Everything could go up. And that's one of the reasons why you don't want to be on the sideline. And I'm basically fully invested. You don't want to be on the sideline because there's always this possibility that silver gets above 35 and the HY gets above 350, and everything just goes higher, and you missed it. That's why I tell people, if silver gets above 35, you got to get in. You can't risk it, because if you're not in at 35, we're probably going to go to 50 in 2 months. And most of these miners are going to go up 100 to 200% in 2 months, which is insane. Can you imagine? I have this list called the Mormons. They're all the high quality silver plays. I call them the Mormons because they're the pretty girls you want to marry. You're not supposed to marry stocks, but you can marry these 8 stocks, the pretty girls. Those stocks are going to go up 200% in 2 months, which is mind blowing.
Yeah. Any other commodities that you see huge potential upside in the same way you see gold and silver?
No, but I will say this about other commodities in the base metals, is that I think people are going to be very disappointed in copper. A lot of people are really bullish on copper because they think that they have normalcy bias, where the economy has basically grown for 15 years, and they think the economy is going to keep growing. Well, Japan and China and Asia are supposed to be our economic growth hubs. And the growth, you have growth in India and in Indonesia, Vietnam, but China and Japan are both sluggish right now. And if the US goes into recession, like I think it will, those economies will become even more sluggish. And Europe, if the US goes into recession, Europe goes into recession. And I think this recession is going to last 3 years. I think the worst of it's going to be 2027, but we get to 2028, it's going to be a whole new era. We're going to see a lot of change between now and 28. And so if you're expecting, huge demand, if you will, for copper, I don't think it's going to be there. Once the US goes into a recession, like starting in Q4. So I think the existing copper miners will do well because of inflation. So copper prices will go up. Now their demand won't go up, but their prices will go up. So their free cash flow will go up. So their stock prices will go up. I see that. But the development projects, I'm pretty bearish on them. I just think that these big development projects are, they're going to have a lot of trouble finding financing or finding a reason to build them. I don't think the demand's going to be there. I think demand's going to be fairly flat. So basically, we're going to get by with kind of existing supply, I think, for the next 3 years. So base metals, I'm not bullish at all. But I do think copper is going to go to $6 to $8 just because the dollar is going to go down sub 80 on the DXY. So if the dollar crashes, all your base metals are going to do well because they get priced in dollars. So I do think we're going to see $6 to $8 copper prices, and they're all going to go higher, all the base metals, but not demand. We're not going to have, this is not a decade of economic growth. It's not. It's the opposite. It's starting.
How do you price in like the geopolitical risk that's ongoing, like with Ukraine and Russia, Iran and Israel, potentially even North and South Korea, Taiwan, China, all that stuff? Is there a high chance that something all out breaks through in the next year or this decade? Let's put it.
I definitely alluded to it when I talked about systemic risk with the U.S. bond market and U.S. dollar. That systemic risk, a lot of it is foreign. It's primarily foreign. For instance, 40% of the U.S. stock market is foreign money.
Mm-hmm.
$20 trillion. So we have 50 trillion. It's like 55 trillion. So 50 to 40%, $20 trillion in the stock market is foreign money. If 10%, and I think it's going to be more than that, if 10% leaves, that's $2 trillion. That's a lot of money. It's like 10% of our GDP. 10% of that money, when it leaves our country, they dump the dollars. So they're holding all those equities in US dollars. And when they sell them, they sell their dollars. $2 trillion dump. So that's systemic risk on the dollar. And then the dollar just starts going down, down, down. Then on top of that, you have foreigners holding our treasuries. And any treasury you're holding over 2 years has systemic risk that you're not going to get paid back. People start dumping those. When they dump those, they also dump dollars. More downward pressure on the dollar. So the systemic risk internationally is much higher than it is internally, much higher, because we depend on foreigners to buy our debt. We can't finance internally $200 billion a month. Right now, we're about at 160, 165 a month, 2 trillion divided by 12. We can't finance that ourselves. And so most of our systemic risk is internationally. The majority of it is internationally. And that systemic risk is being ignored right now. And it gets worse because the systemic risk also is the liquidity that's required to roll over debt. And there's this one guy on the internet and he does a lot of podcasts. He's done a really good job explaining that it's not just U.S. debt that needs liquidity. That's why all the economies are tied together. And it's not just the U.S. that has this huge debt bubble. You also have this huge debt bubble in Europe, Japan, China. All of these countries together have to roll over this debt. And he says that the debt has to be rolled over like every 5 years. And so that if you take the cumulative and you take 20% of it, he said it's like annually the amount of debt that you need globally just to keep the whole international global system afloat, if you will. That's why debt keeps expanding bigger and bigger, because this debt needs on an annual basis needs to be rolled over. And his number is something like 50 trillion plus on an annual basis that needs to be rolled over. Where in the heck do you find that much liquidity? Now, we haven't had a serious recession. So if you get a serious recession, then you have a liquidity crisis potential because people are looking for dollars or money or euros or whatever to roll over debt. And so it's a numbers game, and it's getting very, very precarious because we keep expanding debt. Well, expanding debt works really well when things are expanding, but it doesn't, it actually does, everything blows up in a deflation. That is the reason why you hear Powell talking about 2% inflation is our target too, and we don't go below that. And you heard about Japan, they were nervous about, they've always been nervous about deflation. And the reason why the fear of deflation is because of what I was just talking about. You need liquidity, and any deflation at all breaks stuff. If you go from 2% inflation to 1.5, it breaks stuff because that shrinks enough liquidity in the market when you don't have enough. So not only do we have the debt level crisis, but you also have a liquidity crisis. And I don't know which is worse, but they're both huge. And that's why gold's high, and and everybody's ignoring it. It's like, this is like, and we've always said this. We've always said that when the debt bubble pops, look out, right? We don't know the outcome of this, but we know if it ever pops, it's going to be bad. Well, it already popped. I can hear the air. I can hear it. It's coming out of the bubble right now. I can hear it.
Insofar as there's someone out there to buy our debt, right? Until that ceases to happen, that's when the bubble pops.
It actually, that's why I said I can always hear it. It already happened.
Mm-hmm.
If you look at Japan, if you look at how much bonds, U.S. Treasury bonds, well, China, we already know. China went from over $1 trillion, and now they're down to under 800 billion, and it's been a constant selling. China's been constantly selling for over 5 years. China, this isn't something China started recently. It's been ongoing for a while now. China stopped buying our bonds. They're net sellers. Now guess who's the net seller? Japan. Just Japan this year sold $300 billion in our bonds.
Did they sell, or did they just let them run to maturity?
They sold them. Remember when they had that problem when they were trying to
the yen carry trade?
Well, when the yen got too high, it got to like 160, and they had to sell it back down. They sold bonds, a chunk of them, like 300 billion. They bought some back. I think now they're net down about 250 from their top. They were almost to 1.4 trillion. Now I think they're down about 1.1. But that's the debt bubble popping when your two biggest buyers are sellers. Now maybe Japan will keep buying, but I think the opposite is true. I think Japan's going to keep selling. And China, we already know, is going to keep selling. So we're losing our customers. So that is the debt bubble popping.
I see.
Slowly. The air's coming out of the bubble.
Yeah, for sure. For sure. I mean, that's a perfect metaphor, what you said there with the fact that you could actually hear it slipping away. Anything else you want to talk about, Don? I think we've covered a whole host of things in the last hour or so. Anything that we haven't touched upon that you want to talk about?
I think we covered some really good subjects. There's nothing really I can think of that. Just a couple things. We're having these issues with just data points that kind of point to I think I'm right about what's coming. So I thought that oil, when the recession came, would basically trade in the 60s. We actually did trade in the 60s, but now low 60s. But now I think we're actually possibly going to trade in the 50s. It's really interesting. We had all these issues with Iran. Iran's getting ready to get bombed by Israel, and oil's only at $70 today. Like, where's the fear? So once that fear is gone and we hit a recession, I think oil is going to go on. I think it's going to get a 5 handle here. The other thing that's interesting is the dollar's at 103, almost to 104, 103.6. The dollar was up today. So the dollar's up today and gold's up today. That's not supposed to happen. The dollar's been ripping. I mean, it was like almost a 101 flat, might even went under 101 flat. And today it's at 103.7.
It sounds like an underlying safe haven trade.
It is, absolutely. And it's basically foreshadowing a sell-off coming. That's kind of what was my point, is that oil's down because it thinks that we're going lower recession. The dollar's going up 103.7. I always said it's going to go somewhere between 103 and 105. I don't think we'll get above 105. Right around when this all goes down, I think it probably will trade at 105, could even go a little higher than that. And then the 10-year, it's higher today than when Powell cut 50 basis points, 4.09. It was down to, I think it touched 3.6. I mean, it's going the wrong way. What the heck, man? Went 3.6 all the way to 4.01. What's the 10-year doing going up? It should be going down. So that's kind of the systemic risk issue. Well, that's the people are buying bonds because they're they're nervous. They think that, but in theory, if they're buying bonds, then the yield should be going the other way. But let me look at it one other direction: is that nobody is buying these bonds because of systemic risk. So the yield is going up because nobody wants it. There could be that. There's a lot. It's kind of interesting. So I think the S&P is the most important data point by far. But then you have the dollar and you have the 10-year bond are also important to look at, and then oil because oil is a kind of forecast that the economy is weakening. No, there's no demand for oil.
I had Eric Jung on the show a couple of days ago, and he pointed something to my attention that I'd never heard anyone else point to, which is China's been reducing its oil imports at a significant pace in the last 4 years.
That's because,
So in large part, it's due to China's oil demand side being reduced in favor of their more EV inspired boom there, let's call it.
It's also because their economy never recovered from COVID.
Hmm.
It never recovered. We've never, like next year, they've always said that anything below 5% growth in China is recession. And they can't, like next year, they're not going to be above 5. I think they're going to be below 4 once the US goes into recession. So I think there's that, but those are the only other data points I wanted to mention, but this has been a good talk.
Yeah, for sure. Don, where can people find you?
Well, on Twitter, you just mentioned Eric. Eric and me, we tweet back and forth all the time. I got him into the Mormons. He's very happy. I created my Mormon list back in November, and he jumped on a few of them. He's quite excited about his silver investments. He's a gold guy, but he likes the silver miners too.
Yep.
So yeah, and then so you can follow me on Twitter, X, is my name at Don Durrett. And then anybody that owns gold and silver mining stocks definitely want to check out my website. It's not a stock picking service. It's mainly for people it's for gold and silver mining investors who want access to data. I have 850. I have all the gold and silver miners in my database, basically. So thanks for that.
Yeah, 100%. Be sure to check them out, guys. I'll have the links to all that in the description box below. And I'd like to thank you, Don, for coming on. I'd like to thank the audience for watching. And if you enjoyed this content, be sure to give us a like, subscribe to the channel if you haven't already and you're getting value out of it. And check out our Substack, capitalcosm.substack.com, for a whole litany of perks that you won't find here on YouTube, including exclusive content, the chance to ask future guest questions, and to make future guest recommendations, and a whole host of other things. With all that said, thank you guys for watching, and I'll catch you in the next episode. Bye, y'all.
Thanks, Danny.